Welcome back, guys. 27th to 31st of October, price action levels. So starting off with USD JPY, got the two levels marked on the chart here, starting here at 108.89 and down here at 105.31 level. This is obviously the range that you should be using. So we'll just put a trend line on here. You can see that this downtrend has been broken just here, broke here, retest here, and then it's gone back up here. So you should be looking for buys on pullbacks on this pair, dropping down to the 4-hour chart or possibly the 1-hour chart, as it's in an uptrend. It's broken this trend line, this daily trend line, so it's in an uptrend back up to, in the first instance, 108.89. So look for pullbacks in this range here to trade back up to the 108.89 level. If we get up to the 108.89 level without any pullbacks, then watch for bearish candlesticks up here to trade this short back down. But be aware of the recent news about BOJ possibly easing, which could send this pair to another high, so just be aware of that. On EURUSD, obviously this is still going down and down and down, still in a downtrend at the moment. We have had a little bit of a pullback on the daily chart here. If we flick over to the weekly, you can see this level here, which offered previous support. See these three points here at 128.16. So you can see this is obvious support here on the weekly a while ago. If we drop back to the daily, you can see that is that level there, 128.16. So if the price pulls back to that level there at 128.16, then look for a bearish candlestick to keep trading this to the short side. If we get a pull up here, next level that I'm interested in is around the 130, 132 level, where you can see this area of supply and a big drop out of it. So lots of sellers here selling out of this supply zone. So if we get up to this level here and you don't see any bearish candlesticks, you could look and wait for possibly 129.31, and then your next level to go short out of is the 130, 132 level. So for me, my spots of interest on EURUSD, 128.16 and 131.27. On GBP USD, looking a bit similar to EURUSD. So I switch over to the weekly, and you can see here previous resistance zones just here, look. So we've got resistance there, there and there, switched into support just here, which has been holding. Then we've had the break, and the price is now meandering around this level here, which is 159 level. So if you're going to follow this trend down here, let's go back to the daily. You're looking to sell around 162.85. If we bounce back up to here, that's obviously the ideal spot there to sell from. You've got another little zone just here. You can see here where it's shown resistance just here, resistance just here. So this level here is the 160, 160 level. So keep an eye on this spot here, 160, 160 or 162.85. And in the extreme, if we get a big bounce, then 165.92, 166 level, where it showed a previous supply level which hasn't been retested yet and had a big sell out of. And on NZDUSD, another one with this bullish kind of flag pattern. However, we've got to look at this level here, which is 77.50 on NZDUSD. If we just flick over to the weekly, you'll see that this level had provided previous support in the past, back in July, and we're back at it now, or we were back at it. So if we flick over to the daily, you can see it's bounced out of there, but not that convincingly. It held here, gave a bit of a bounce, it's held again, and it's moved back up. It moved back up to around the 80.50 level. just here. So what I'd look for on this one is either another bounce from the 77.50 level with a bullish candlestick to give you an entry, or a break underneath the 77.50 to actually prove that this this price level is going to be broken. And what I mean by break is the price breaking like that. So basically the price breaks the level, comes back and retests it and shows that this level is no longer support, it's now resistance, and then we get the sell down from there with a bearish candlestick. So for me on NZDUSD, unless we get a move back up to the 80.50 level, the level to watch this week will be 77.50. On GBPJPY, had a few big moves on this last week. We're back up now to the 173.79 level, which is actually a supply level. Just here, it's also a previous resistance and support level. See here, resistance and support. Showed a bit of resistance here, then it's broken it. So, you know, we need to figure out if this level is going to hold as resistance again. Now, at the moment, it's broken into this zone here. So what we're looking for is the price to actually bounce down out of there, show us a bearish candlestick to trade this back down short. But you need to watch this because there were some quite large bullish moves on this last week. So this may continue as it's pierced into this zone. This may continue to carry on back up here, possibly up to the 175.80 level, somewhere up there where the 61.8 retracement is. So keep an eye on this one. If you see a bearish candlestick under here on the daily chart, then that could be a nice signal to go short. On EURJPY, you can see here the move back up, big candle there on Thursday, 153 pips, and we're moving back up to this particular spot here, which is previous support, previous resistance, and possible previous resistance again just here. You see the resistance here. So we get up to this level here, 137.64. That's your spot to look for bearish candles to continue selling EURJPY. If we keep going on up, there is a supply level just here at the 61.8 retracement at 138.41. So for me, the two spots to look out for on EURJPY next week, 137.64 or 138.41. EURNZD here. Again here, look, lots of resistance here. The pair had a really good go at trying to get through the 161.68 level all last week and the week before. It did break above it, came back, but it's you can see by all these wicks where it was consistently being rejected by the zone to 161.68. I wouldn't have wanted to be trying to get into a long position there. This is why I talk about wait to see a confirmed break before you go into any long positions. Say for example you use this one here to take a long trade. Say you've done this, you wouldn't enter at the close of this candle. You'd enter just here with a pending order, and you can see it would never have been hit. But see, this is using price action to get you into trade without, while at the same time trying to minimize your risk. So if you would take a break trade like that, you'd have your entry here, a buy stop, and your stop loss here, so that if the price carried on up, then it picks up your entry here and carries on. But that didn't happen, and anybody that went long off this candle here just because it broke would have been severely disappointed and probably stopped out, because the stops would have probably been under here. But now we're back up at this level. It's trying to get through. If you're looking to trade this long, then as I just said, you've got to wait for this sort of confirmation to trade a breakout of this level. You can't just enter long just because a candle breaks above it. As you can see from here, you could end up getting yourself into a lot of trouble. There hasn't been a bearish candlestick coming back down, and in fact, to get a bearish candlestick coming back down out of this level, it's going to need to engulf this big candle here. So just keep an eye on this over the next couple of days, see where this goes. If we drop back down sharply to the 158 level, 158.10, just down here, then obviously you can look for a bullish candle to trade this back up. And in the same respect, if you want to go short under here, then look for an inverse of this to go short. So you get the break, then a retest, and then you trade. When you've had the retest, you take the short position, same as you take the long position here after seeing this retest and showing that this actual zone, 160, 168, in the case of a long position, has actually turned from this resistance, has turned into support. So watch this level carefully next couple of days, 161.68 on EURNZD. USD CAD, you can see this one's also been a bit wicky. It's been pretty much undecided all of last week as to which direction it's going to go in. You've got the high here up at 1.1373, and you've got this zone just here, 1.159 or 1.1159. So I will be looking here for bullish candlesticks around about this level here, 1.1159, to trade this long, coming back up with this trend. If we see a break under here, then your spot to look for short positions is there, 1.10752, obviously with a confirmed break. Trading down to 1.09548. This is a level of demand. And it also has a 61.8 retracement of this big move up inside it. So for USD CAD, either long from 1.1159, long from 1.09578, or shorts under these levels if price action shows that the level has actually been broken and retested, and that the previous resistance or support has switched around, so we can trade in the opposite direction to the trend. Here's the news coming up for next week. We have on Sunday, we have bank stress test results, which I'm going to come back to in a second. But moving on through the week here, you can see Wednesday 7 PM European time is the FOMC statement. This is the big one that you want to avoid. Trading at that time, charts can go anywhere. Just stay out of the markets around 7 PM on Wednesday the 29th. There's some Japan news on Friday, monetary policy statement. Be careful of this because there is talk about the Japanese banks or the BOJ introducing more easing to their currency, so be careful of that. The rest of the news, you've got the RBNZ rate statement on Wednesday night and the official cash rate, so be careful of those. So for me, Wednesday and Friday could be the tricky days as far as news is concerned, affecting your trading. So here's the result of that stress test which took place today. 24 European banks fail the stress test. Basically what they're saying here is that the list includes 2 Greek banks, no surprise there, 2 Belgian banks and 2 Slovenian banks, but the worst affected was the Italian, and one of the Italian banks, which had a capital shortfall of $2.1 billion, which is ridiculous. So what you need to watch out for is when the markets open Sunday night tonight, be very, very careful of some gaps, because this news which came out today could affect a lot of the pairs, a lot of the euro pairs. So keep an eye on that, look out for gaps. Don't go diving straight into the market as soon as it opens, and just be safe in what you're doing with this news that came out today. So that's it for this week's look at our price action levels and a quick look at the news. If you like what we do here, please click the like button, subscribe, or send me a comment, and we'll see you next week.